Shares of Netflix were jumping in extended trading yesterday after the company reported higher than expected subscriptions during the fourth quarter. That represents a stronger growth than what Wall Street expected as the streamer builds its ad-supported service and cracks down on password sharing. Netflix now has 260.8 million paid subscribers. That's a new record for the platform. While rivals in the streaming space have struggled to reach profitability, Netflix is really prepared to invest in a larger slate. But it said it won't be doing that through acquisitions of traditional entertainment companies or linear assets. The company has said that in a letter to shareholders. The subscriber growth was also driven by a strong demand for shows, including the final season of the royal drama The Crown and David Fincher's The Killer. For more on this now, let's bring in Mike Ingram in London. He's Active Trade's Senior Market Strategy. Thank you for being with us. Mike, has a weaker dollar helped the business so far? And if yes, how?
Well, actually, if you crunch the numbers, it appears that the dollar has been a bit of a mixed blessing for Netflix. In terms of revenue, it seems that the impact in Europe has been broadly neutral over the last 12 months. In Latin America, it seems to have held the company back, but it supported the results in Asia. And overall, actually, the revenue side has been a little bit of a drag. One thing, however, I would point out is that if you look at the most recent set of numbers that you're referring to, the fourth quarter numbers, actually, there was a big foreign exchange write-off because Netflix has a certain amount of euro-denominated debt. That got revalued upwards, and the effect of that from an accounting perspective was to reduce the earnings, and that's why there was actually a bit of an earnings miss and why the market wasn't actually particularly worried about it. So overall, I would say it's been quite mixed, and certainly in terms of the most recent set of numbers, the markets looked just straight through that and said, well, this is an accounting thing, it's not real, and we're going to mark the stock up.
Interesting. What sort of strategy will the company adopt from now on to stay relevant, but also in a way present a better business model than its rivals?
Well, its repricing strategy and its segmentation seems to be working out quite well. I mean, it launched its ad-supported band in November last year. We understand from the company they've already got something like 23 million active users. That's helped to create a bit of a safety net for price increase, which was going elsewhere. But as you kind of think, I think you mentioned in your preamble, I mean, other streaming services are struggling. We've seen Amazon Prime Video announce recent layoffs. Disney Plus is struggling, and some of these companies, Disney certainly, is going to have problems with content because of the writers and actors strike last year. So their pipeline actually on content is not looking very good. Meanwhile, Netflix is diversifying into quality content. You mentioned The Crown, but also, it's just announced a $5 billion deal with WWE for live stream wrestling. It's going into more live stream events, comedy specials, and also making a move into gaming. So it's diversifying quality content, competing from a subscriber that's going to have his wallet increasingly squeezed.
Mike Ingram, thank you very much for your analysis. And now let's go to other top stories from around the world. Alibaba co-founders Jack Ma and Joe Tsai have bought more than $200 million worth of shares, sending the company's stock up almost 8%. Bluepool, an entity linked to Tsai's family office, acquired nearly 2 million Alibaba depository shares worth $152 million, with Ma acquiring another $50 million. Alibaba has a market cap of more than $174 billion. Embattled Chinese real estate developer Country Garden is looking to raise up to $530 million by selling properties in Guangzhou. The assets include a hotel resort, 4 office towers, a shopping mall, as well as rental apartment buildings. Country Garden, which was once the nation's biggest developer, defaulted on dollar bonds last October as the sector battles a liquidity crisis. And German software company SAP reveals a restructuring plan amounting to $2.17 billion. The move will enhance SAP's focus on the artificial intelligence-driven business sectors and will affect 8,000 positions in the company. The company also projects that operating profit would rise to a roughly 10 billion euros next year as a result.